I've been back in Dubai for over a week now, living full-time in Creek Harbour and observing everything as it goes as a resident here. So I wanted to give you a proper on-the-ground update on the whole US-Iran Middle East escalation. This won't be speculation or politics talk. It's what I've observed in the market, in the flights, rentals, developer behavior, stock market, and how serious capital is currently positioning. Feels great to be back in Dubai and telling you about all the property insights in here and also throughout the world directly. With that being said, thanks for watching, subscribe, and let's get into the video. One of the strongest real-world indicators of stability is actually the flight activity. I flew back over Egypt and Saudi, slightly longer route, never really went over those countries before. Usually we would go over Iraq or Iran, but obviously landed safely. Honestly, I never really had doubts about safety, but psychologically it feels different when the roads are adjusted. Last week, mainly Emirates and Fly Dubai were operating within this region specifically for the UAE, and there was reduced international activity as a whole. So even our neighbor Qatar, they were only operating flights of getting all the residents back or out of the country. This week, however, most airlines resumed, roads were reopening, and I've even seen flights going over Iraq now, and aviation confidence returns before all the tourists do. This is the first signal of normalization, and I hope it lasts. So while I'm not saying that this will be the case, I'm just analyzing it as an observer and as someone who is going through all these changes and is currently in Dubai. So I hope you find this information helpful, and if you have your case to share, please comment below. I'm living in Creek Harbour full-time right now, so let me tell you what it feels like. Honestly, when I arrived, it was all the same. Nothing really changed, nothing really was different. It was also during the night, so I couldn't really observe anything. However, it's important to note that there were accidents in my neighborhood and actually in my neighbor tower, which was hit. So I have to acknowledge I was a little bit hesitant to even come back and be in this area. However, let me tell you how it felt the next morning. When I woke up, everything was back to normal, to be honest. I noticed some slight reduced activity, as in there were not as many people outside, and also when I went to the city, there wasn't as much traffic. So I do think that this might also be influenced by the heat, which is back now, and it's kind of warm to even go outside as often as it used to be before. However, when I arrived, it wasn't really as warm, so I wouldn't say this was the main factor. Probably it was the effects post all this escalation. But daily life, it continued. So I go to one cafe here to work from there most of my days. And when I went there, first day, it was kind of back to full levels. It wasn't really as full as always, so I would say maybe 10 to 20% less. But that was during the morning. After noon, the cafe was really filled, and I would see people at the lagoon there in the other side of the Creek Harbor, where you have the actual lagoon at the Vida, and it was really packed. So I didn't really notice anything different. And that contrast really matters because the headlines didn't really equate the reality. In the evening, I went to meet a friend, and on the way there, the only noticeable thing was the traffic. It was really reduced, and I'm not sure why. Probably again because of that, since now there are not as many tourists around. So even though I think personally so many residents now are returning and the actual people who live and work in Dubai will be back to normality very, very soon, if not already happening, there is still obviously less tourist inflow. I mean, that's really observable and clear to the point because of the reduced flight activity. So if there were not really as many flights connecting through Dubai or in the region overall, like from Doha, for example, then there will be obviously less tourists just coming in and out from Dubai. Overall, felt really normal, and I think it's going to get even busier. I've mentioned this in the past raw videos that I was producing on my views and analyzing the whole situation. When geopolitical risk rises, markets react immediately, and I'm speaking about the stock market. So what we saw from the beginning and also until this moment is that the market dropped significantly. However, besides the oil volatility and the regional uncertainty that is definitely priced in, every time there was some news about something more positive happening, such as the reopening of the Hormuz Strait and people actually saying that there was no system breakdown, we could see that this wasn't a collapse, it was just some temporary risk, and the markets reacted accordingly. Every time there was something like this announced by either Donald Trump or the other parties, we would see that the market would spike back up right away. Overall, I'm not saying this will continue. I'm not saying the market will return to its normal peaks in late February, because even if we look at the biggest companies such as MR, the stock really increased crazy in the last 5 years by about 600%. And now it was cut by about 30. So I'm not saying it's going to go back as quickly. I personally think it will take some time to get back to that same level, and especially that all this situation is still not finished yet. However, you can see that it's moving backwards. It's moving back to its heat. It's moving back to its peak level. The question is, how long will it take to reach that moment? So again, if you're in for the long term, I think this was a pretty good opportunity to buy the dip. If you are in for short-term speculation, probably it's very uncertain for you to even consider that. So when the Strait of Hormuz temporarily closed, developers, they slowed the launch advertising, reduced campaigns, and they generally had lower visibility. There wasn't much talking and there wasn't much being observed, even Instagram or other meta platforms. But the moment it reopened, heavy ads resumed right away, and it was noticeable everywhere. And tell me that I'm wrong, but I'm not sure how is your Instagram performing if you were ever looking or searching for real estate in the UAE. Mine was just filled with ads. Launch campaigns restarted not only in Dubai but Abu Dhabi and other places, and even the region overall. So I was receiving ads for Azerbaijan, for Georgia, for Qatar, for Saudi. That tells you that the market obviously paused, but it didn't really freeze. So I'm not sure about the confidence. However, it definitely didn't disappear for the developers. They are back full on in the game. On the other side, the confidence of the investors, I think it would take some time to regain it. However, this could also be a good moment to bigger, larger investors to get some distressed deals, take over on payment plans, and even for individual investors to look into perhaps ready units which are still being inhabited and are still hosting people who basically live and work in Dubai. So you will still have tenancies. That's why let's look at the rental market and what happened there. Now we'll get a bit analytical. Rental market remains relatively stable, but we are entering summer. So an important nuance is that the slow season is approaching. Some prices are already adjusting slightly. In Creek Harbour, I've observed around 10% drop, specifically in larger units. So the bigger layouts, they felt it more. But the context really matters here because the rents were already pretty high. And I am a landlord as well, and I actually agree with that. The rents were very high. So my point is that even with this small adjustment for the ready units, which is the segment that I've always loved and pitched versus the off-plans, yields will and are remaining attractive. Demand hasn't collapsed. People aren't really living in mass. There were so many professionals who are dependent on their jobs here in the UAE, so they have to stay. This, in my opinion, is not 2020 style kind of panic, because now we have a real growth in population and not just oversale and oversupply. There is also population that is taking those units. And by the way, I'm saying that specifically on the ready units. However, if we look on the other side at the short-term rents, different story here. Airbnb and hotels have significant discounts nowadays. There is aggressive pricing and lower occupancy in the short rents. Short lets always react faster to uncertainty. However, in this market specifically, where there were so many who were doing Airbnb subleasing and just trying to maximize the short-term properties, now it's probably the time where these people will be hit the most. Because you need to ask yourself and put yourself in the position of your tenant. That's something that I always do, and I really don't get why people are not trying to look in the same way. Because right now, if you are actually hosting an Airbnb unit, you need to think that that person who is going to look at your unit, they really need to see something special there. And that could be two ways. One is the pricing, which will be really well adjusted and perhaps for a longer term lease where that tenant won't have to pay for all the utilities set up, for all the fees, for anything else. So just rent it out straight away so they can actually not consider long-term rentals instead. Or secondly, it should be really unique. It should have something that will really distinct and differentiate it from the hotels or any other competitor segment. That's why currently, in my opinion, long-term rentals is much more stable and much more justified, and this is an important distinction for the investors. Now let's talk about the developer behavior, and this is where it gets very interesting. Incentives are back. What do I mean by this? We're seeing 4% DLD waivers. This is something they were doing back in 2020 when I personally bought from Damac with an incentive to get 3% of that DLD payment returned to me if I made all the payments in time. And I got that. Now we see full 4% DLD waivers if you purchase an off-plan, which again is the same incentive we saw during COVID. Payment plans actually aren't really changed, but there are more favorable entry terms. So there could be just a lower requirement, such as 5 or 10% versus the 20-30% that they used to do back in 2025-24. Most importantly, heavy advertising restarted immediately. Also important that expansion still continues. For example, just 2 days ago, Shoba announced their expansion into Abu Dhabi. They're making this Shoba city where, to be honest, the prices weren't very bad. They were really competitive. So even I was looking into some units for myself. That's not the defensive behavior I'm talking about. That is some expansion that was probably planned way back and now they just relaunched because they saw that some more positive things are happening and probably people will start looking back in. Now let's talk about the two types of buyers right now. The first one is the opportunistic capital. Some clients are heavily and specifically targeting off-plan distress deals, buying in bulk or renegotiating secondary assignments. They're really looking for emotionally shaken sellers. These buyers, they thrive in volatility. They don't react emotionally, they position themselves quite strategically, but most importantly, they have the cash in hands, so they are very liquid and they are ready to jump in right away. The second part is the stability investors. These guys are mainly focused on good areas that they have tenants and they will continue to live there, such as Business Bay, Downtown, DIFC, Dubai Hills, Shoba Heartland. And why is that happening? Well, because the salaries will continue. Corporates still operate and expats still live here. People still need to rent. Ready properties in core areas remain fundamentally supported. So what's the regional reality now? It's more of a cautious optimism. We saw ceasefires, which are still continued, and we saw the reopening, closing of the Strait of Hormuz. There is temporary de-escalation, which is very good, and I really truly hope this will continue, but the region changes quickly. One positive headline doesn't really eliminate the structural geopolitical risk, which is definitely something to be acknowledged. So we're not euphoric, but we're also not fearful. It should be measured, and of course, in all kinds of situations, you need to analyze and do your due diligence for all your investments correctly and understand what type of investor you are. Are you looking for capital appreciation? Are you looking for distressed deals? Are you looking for just simple yields in a still very good environment where you will still receive much higher yields than anywhere else in the major capitals of the world? You see, when you put it that way, it makes sense. So it really depends on your perception and on your kind of play. If it's very long term, of course, it always works out. If we look at the bigger perspective, Dubai and the UAE have actually handled oil cycles, COVID and regional tensions, and global financial shocks. But one thing which makes it different is that Dubai and UAE was never targeted directly. That also has to be acknowledged. But as we saw, it still handled the situation pretty well. So each time the capital returned, population increased, and the infrastructure expanded. And while you might say the safety aspect was challenged, which I mean, I can say it as well, because it does. But it's not the safety of the people living in the city or the country. So the people outside, they still feel very safe. Of course, there is risk. But if we take precautious measures, it should be way better than you probably read in the news. It doesn't really remove the risk, but it just demonstrates resilience. If you're an investor who's currently looking into this market, or you were considering it before, or you just have some properties already and you want to resell them, on the contrary, you might not have anything, but you want to buy them now, but you just still see all this uncertainty, this is exactly where professional guidance is important and it comes into play. Through Agora Advisory, we work with individual investors, ultra high net worth individuals, portfolio builders, and institutional level clients. We offer tailored advisory packages depending on the client's strategy, whether you're buying, selling, refinancing, or sourcing a deal yourself. Recently, one of our most requested services, which we just introduced, is the intelligence reports. These are deep feasibility analysis on specific projects, areas, and even standalone buildings. They include the initial launch pricing data, real transactional sales versus the announced launched prices, delta analysis, pricing heat maps, 3D transaction mapping, and entry time strategy. Many major clients are using these reports to understand exactly when to enter, exactly when to buy, and what price level makes sense. Before becoming a property investor, I worked in many multinational companies, started my career at Shell right after graduating from the London School of Economics with a major in finance, which is why I used my skills and the knowledge accumulated then to apply it to my investor mindset. And that's how I founded the independent advisory company, Agora Advisory, where we focus purely on data, strategy, and the numbers. In volatile environments, clarity becomes your strongest asset. So if you need that clarity, don't hesitate, reach out right now. All the links are in the description below. Nevertheless, if you like this video and if you're happy to see me back in Dubai and giving you all the insights here, drop all the comments below. I'm more than happy to reconnect with all my subscribers. I really thank you very much for watching this and supporting me and the channel throughout these times. And as always, bringing you the unbiased truth in real estate. Stay safe, invest smart, and see you in the next one.